S&P 500 crossing above 3,000 for the first time since the beginning of March. The Dow also topping 25K. Steph Link, good to see you. What's the significance of those big numbers that we've now been able to get over?
Well, psychologically, it's very positive. It makes people feel a little bit better, especially if they were buying back in March and April and May. But here's the thing. As we reopen, we have been getting pockets of activity that is picking up, right? Like the TSA travel numbers look like they're getting better. The open table booking numbers, a little bit better. Mortgage applications up 4 weeks in a row. So these are baby steps. But what this tells me is, yes, we had a horrific recession and we're still in it, but that it's probably going to recover a little bit faster than I initially had expected. I don't know if it's a V, but I do think April and May are the worst months of the year in terms of the economic data, and that we are going to start to see an improvement. And if you do see an economic improvement and you do get the economically sensitive stocks to rebound, which they are doing nicely, and they have been actually in the last couple of weeks, that's very encouraging. I mean, if you look at energy, it's still down 36% on the year. If you look at financials, they're down 26% on the year. Industrials are down 20% on the year. These things could have definitely a mean reversion, and that actually could propel us higher, along with technology still also being one of the leadership.
So, Josh Brown, you got the S&P 500 above its 200-day moving average, first time since the beginning of March. Tom Lee out today suggests that the market is still in the hands of the buyers. He said the fact of the matter is the sellers, they're done selling. So the buyers have control of this market right now. You buy that?
Not really, but there are some things happening in the internals that I think are very constructive. And I hope the scenario that that Tom lays out is true. I'm not rooting for him to be wrong. And to his credit, he has been bullish throughout. And now, when you look at things like the RSP, which we brought up on the show last week, this is an ETF that tracks the equal weight S&P 500. It assumes every component is the same size. So that ETF is up 3.5% today, with the S&P up only 2%. So that tells you that strength is broadening out. And when you think about stocks off their lows, the IWC, which is the microcap ETF, is now 52% off its low. That is an incredible rally. The Russell 2000 up 45% off its low. So it's not just the 10 big tech stocks plus Amazon. There are a lot of positive moves in stocks. The internals are getting better. So that's the bulls' credit. Here's the other side of that, though. The first thing is, Stephanie points out, slowly but surely seeing the statistics getting better, and that's true. But statistics building off of an extremely small base is very misleading. We should not be thinking about statistics at all right now.